I talked this through in the debrief on Monday, and what you're looking at is this level here that establishes on a 5-minute level. Poor high, we test it, test, multiple tests all around 74s. That then becomes a target, that becomes a point that you're looking for a break. This also matches up on an hourly as well, and that's the important thing, that it's not just a small 5-minute level. Matches up on the hourly. So what I'm looking at with this is not just to point out, oh look at it, it went through the level. It's more about how do you plan for this trade, how do you execute this trade, and what are you looking for when you do execute it. So looking at the process to execute trades. First thing you want to be doing, we can see the level, we know what's going on there. That's the level to break. The question is, how do you get into that? How do you get on a trade before it breaks, or alternatively, what do you do for a trade if you're not, and can you buy the breakout? Your clue starts to come in when you get this dip down here, and that starts to reverse back. This is where you can now start pre-planning your entry. What you're looking for is some kind of first idea of an entry is a move back into this range. Any move back into this little top range between 60 and 74, that could be your chance for a long. If nothing else, you could possibly even have it from there through the sort of 53s. So that move up either is a confirmation that we're going to get the break, or alternatively is a chance to actually execute a trade. So that's your first bit of pre-planning. Another way to get into the trade is this small consolidation. Once you get into the range, you're then looking for a little bit of time spent consolidating where the market can't find any sellers to get back out of the range. It can't find the sellers that it found here. Again, that's then another place to start looking for an entry. So once it gets back in and then consolidates, you can look for an entry. Final entry possibility is to try and play the break of the new high, or the break for a new high. That's the difficult one, because you've got to be very quick on that, or you've got to put a stop in and hope that your stop doesn't get slipped on a move higher. So they're the ways that you're looking to get into the trade. In terms of an exit as well, I think this is always important to pre-plan it. Most people think, oh, I'm going to get in, I'm just going to make some money on the trade. Well, where are you going with this? Nice, easy first target. Recent high on the hourly is 87s. That's going to be your first place to be looking. What happens when we get there? Do we get reaction? And also, how do we get there? If we get a sudden spike above 74, that could be a reason to get out. Suddenly jump through 74, there's your chance to get out, anywhere around 87. Alternatively, you could look at 87 and just say, right, that's my target, put your offer there and get out. The other element is, what if it doesn't jump and instead just starts to accelerate through? If it starts to accelerate, this is showing strength in the move. This is showing buyers are willing to keep on coming in. If that happens, that's when you can watch the 87s and look perhaps for the jump to come above 87 to give you the out. So it's the same principle of an exit, that it jumps, but it's whether it jumps from 74 or 87 to give you your exit. So it's all about having these trades planned so that when you execute the trade, you're not then wondering what you're going to do next, or how you're going to get out of this trade once it actually starts going. I'll bring you the ladder up and we'll get this going. There's a lovely little bit of price action, very cable typical, at the beginning of this move up, which gives you potentially an early chance to get in. And you see it start coming in here. There we go. Little push up, and you see the size starts to build. And what happens is, on any pullback, as soon as it trades into the bid, size builds up very, very quickly. So we'll see again, there we go. It didn't even trade into 53s, and it's then 75. You're getting this 100 following up as well. Now at 55s, absorbs, and the size builds up. So trying now to get in at 56s. We're now getting up around about here into the middle of this range. Now we're up to 60, so now we're pushing into this top range. This is where your plan's now coming in. This is the range that you're looking at, thinking, right, as long as we're above 60, we can get the break of 74. So the question now is, can you get in around 60? Get in at 61s. And once again, you saw exactly the same. Sold into 61s, and then you got 50s, 60s coming in. Another good sign. To account for the other entry, to try and get the break, we've got a stop up at 74. So that stop entry could allow you into the trade before the break happens. And then first target, if you know what your size is, if you've already got 5 and you're looking to get 5 more in, it's advisable then, or as a way of trying to exit, if it does jump suddenly, well, the first place to be looking for on a sudden jump would be 87. So to take something out up there would make some sense, particularly if you can get more than your 5 lot clip in. So here we go, back to 60, and now we're seeing a little bit of consolidation. This is where you'd want to see the move holding above 60s, and again, trades back to 60, and straight away, as soon as it trades into 60, the size comes straight back. Now you want to see the size come back at 61 as well. Not there just yet, but are we seeing much trading into 60? There we go, 25, and the bid comes straight back. Now we move up, now the size chases in once more. And it's quite comfortable to try to buy through each of the next offers. What we're looking for now is to get out of this miniature consolidation. So that's up above 66s. Once you get that, that's the point where we should then get the continuation move. So you've now got, even prior to 74s, a new point that above 66, you can then be thinking, right, now the move is on. Gives you confidence if you're long from the mid 50s or low 60s, but equally, if you're not in, can give you a chance to get in or add on to an already established long. Before then, perhaps trying to get the next long up at 74. Once through 66s, then you've almost got to switch now to the planning of how you're going to exit this trade. And you should already have this in your mind. If we get a sudden jump through 74, you're going to try and scale something. If it hits 87 straight away, then you can come straight out of it. And if it accelerates slowly through 74, then you're looking at 87 for the next point for the market to explode up. So it's still sticking in this range, but you're still finding buying down towards 61s once more. There we go, trade 62. Everything that traded down, the bid kept coming back, bid kept coming back. You've still got the 90s sitting on the bid as well. So there's a show of strength here down at 61, 62. It's quite a steady move higher, isn't it? It's not sort of super fast, this move. You know, it's giving you a lot of time. If you wanted to get into this move, very, very easy to do in terms of having the time to do it. You've not had to rush yourself into this yet. So now this is the waiting phase. This is the phase where you have to sit. Wait for it. Either it's going to come back below 60s and you've got to question the trade, or we're going to go back through 66s, and that's where you can feel a bit more confident. Every time the size is coming up now though, it is struggling. We're not seeing it sort of progress in the same way. The speed that you saw through 50s where the size chased it. That's what you want to be seeing now. You want to see the size start to chase. So 66s, can we get it? Can we get the size chasing this? And can we get that willingness to buy into every offer to start to then kick the move on? So there we go. Take 66 bids, 67, 68. Through the stop, not a massively big jump, so no need to rush to get out of this. Maybe you could cover a couple. You know, where it's shown you a recent high, you can cover something. Interesting thing to spot here. And this you can't have planned for, but you've got 460 lots. You should spot that very quickly. As soon as it's jumped through, this is where you should then be looking to perhaps to front run that to get yourself out ahead of the size rather than trying to hold on and let it trade the size. So cover something ahead, and then on the break of the size, this is the break of 87, and then you're back to the possibility of a quick jump through 87 to get yourself out of the trade. So back to 74, 75. This is really key. You don't want to see the market dropping below 74. If it's done that, then this early move up is looking like a bit of a false fake breakout and a break that's been stopped by that 450 lot. So back to 74, we start seeing the bids coming back in. This is good news once more. Then we're back up. Now what we want to see is what happens at 87. Do we get more buying through 87? This is a chance now that having bought some more at 74 and covered, you can now try and run the bigger position. You're looking cover ahead of 87, but as soon as that breaks, then you're thinking, right, now we're on to the next phase of scaling as it accelerates, as it jumps through that area. Hence why you hover your mouse above, so that if it jumps, you can hit market quickly. There we go. Struggled there, 89s. So you come out where it struggled, you only got one left now. So now it's a case really of trying to establish where we can run this to. So now your thought goes to, okay, well, at what point should I come out of this? Should I come out as we move higher and slow down? We've not really shown an end to a move here at the moment. So, and there we go, so a dip back to 95, more buying at 95. So, do you then start thinking about a trailing stop? Try and let this one go. The fact that we're doing a bit of volume up here now gives you a bit of a trailing stop point. You've got this low volume at 95s down to 91s. That potentially is the place to put your stop below. As long as it then continues to consolidate and trade up here, we could then be looking for a longer move up towards this 200 average on an hourly chart. So this is where you can then start to bring your stop up, and this is where you can then almost sit back on the trade. You've got through the main objectives of this trade, the main areas that this should be moving to. So now it's a case of put your stop in and let the trade play out. As it happens, quite quickly comes back. As soon as it got through 95, the stops were taken. We get the pullback, and this moves us all the way back down towards those 74s. But a key bit of this trade is all about how you plan, how you pre-plan your entries, how you pre-plan what's going to happen once you're in the trade. So as much about thinking about where to be in as it is about where to be out and how to get out of these trades. That way you don't get caught questioning what to do in the moment. The only thing you couldn't have accounted for was that size. That happens, but you should already know what you're going to do if you see a large amount of size sitting on the offer on the back of a quick move up. That's a place to give you an exit. Front run that, gives you an exit, and that's what you're looking for.